The 2018 budget, meant to consolidate the achievements of the previous budgets, was passed on Wednesday, May 16, 2018, 6 months after it was presented to a joint sitting of the National Assembly, a joint session of the National Assembly by President Muhammadu Buhari. The National Assembly passed a budget of 9.12 trillion naira, the biggest so far, which is about 5% higher than the 8.6 trillion naira figure presented by the President. What necessitated the increase in the budget figures? Where will the extra money to fund the budget come from? 9 months to the country's next general elections. What projects should the budget fund as top priority? We will try to look at some of these issues and more on Nigeria Today. I am Segun Ojelade. I've been joined in the studio to discuss budget 2018 and the money breakdown by Professor Ken Ife, a development economist. Prof, welcome to the program.
Thank you very much for inviting me.
The budget was passed 6 months after it was laid. Who delayed the budget?
Well, as you know, up until now, we normally blame the National Assembly for delays in the budget. But they rigorously defended their position last week to the effect that as of February, end of February, only 50% of the capital budgets were defended. So the leadership of the National Assembly had to go and meet the President, and the President ordered all the MDAs to go in within 8 days. Some still missed the deadline. So in that circumstance, yes, there are two sides to that story, and both parties have a share of the delay in passing the budget.
What implications does delayed passage of the budget? What implications does it have?
Okay.
Well, knowing fully well, yes, we still have a budget that is rolling, but does it mean there are no?
It's not fair. You know, as simple as that, it's not fair, because if you look at just about 1% of our 198 million people are employed by civil service and public service, and they account for 70% of the spending, simply because salaries continue to be paid, whether it's passed or not, up to a certain limit anyway. Then, you know, nobody seems to care. And I bet you, if salary is not paid for 1 month or 2 months, things will move. So what then happens is that 30% of the budget, which is really for the rest of the 98% of the population, is the one that gets the knock. And I think on that count is not fair. We need to, and then the other thing is that people must understand that the capital expenditure is where you breathe life into the country, because that's where you fund economic projects, you fund job creation projects. That's where you get them. But also, government spend is just a small fraction of the overall spend. I mean, government is $9.1 trillion. The size of our GDP is $120 trillion. It's very small compared to that. And when government is funding a capital project by borrowed money, there are counterparts. So the government's 15% could draw down 85%. So if you look at the figure, the 2.7 trillion is the capital expenditure, 2.87 trillion. If that 2.87 trillion is actually 15% of over 15 trillion. So when you are delaying the spend, you are delaying private sector injection, counterpart injection. You owe the loans, the bonds, the China loans, all those monies, many of them are waiting for government's 15%. You know, so is that leverage is what you are just denying us. You know, the spend on those is what you are denying, and it could have a knock-on effect on the recovery of the economy. It slows things down.
The 2018 budget is 9.12 trillion.
Yes.
for the enormity of the work to be done in Nigeria, the population, everything, how far can that go? The size of the budget?
To be honest with you, the size of the budget is very small compared to the size of our economy and the population. One would expect about 20 trillion naira as something reasonable for the size of our economy. But the reason is because the tax is the main source of funding for government activities. And our tax to GDP ratio is around 6%. But the average in Africa is about 15%. Cote d'Ivoire is 18%, South Africa is 24%. So what it tells you is that there's a factor of 3 out there. So if we are really collecting as much as we could, that budget could easily be 20 trillion. And then it can now begin to mean something to economic activities if we hold the jobs down, if we hold the public jobs down. But that notwithstanding, and I think there's progress being made in that respect, because I hear the FIRS predicting that they might collect 6 trillion, and that has implications for the fundamentals in the budget. It will be good news.
Now, this 9.12 trillion naira is about 5% higher than what Mr. President presented to the National Assembly. And that in itself is causing problem. That why should the National Assembly jack up the figures? Do you share the views of the National Assembly that, okay, yes, we are going to sell more oil at higher prices?
No. To be honest with you, they have every reason to do that. First is that when the fiscal strategy paper was presented, and when the budget actually was presented, the price of our Brent crude in the first week of November was $62, $62.71. The benchmark was $45. So the headroom or the differential was $17.7. Now, with a fraction of time, 6 months down the line, the price of the crude has gone up to $78.5. Now, to jacking it up to $51 is only an increase of $6, but the effective differential is $27.5.
So there is still,
the differential has moved from 17 to 27. So what do you expect? So what means there's going to be more accretion to our reserves, there's going to be more accretion to our excess crude, and that money, the issue is not whether it was necessary to do that. It is necessary that they do that. But the issue is, what did they do it for? What is is there any judicious application of that money? And I can answer yes. And yes, and yes. You look at the figures. About 50 billion of that money was actually put in to reduce our debt. Now, that is very helpful because
local and foreign.
No, the deficit. It was applied to reduce the deficit.
Okay.
Now, it reduces the deficit to 1.95 trillion. And you know that by law from Fiscal Responsibility Act, the law doesn't allow anything more than 3%, the deficit to GDP.
Okay.
So the deficit to GDP this time round with the reduction is 1.75. So that's one good ratio. Then of course, you know that the 2.2 trillion is debt servicing. That's always where we have the issue. But from the forecast of the FIRS that got 4 trillion and looks towards 6, I think we'll be coasting, because just that alone is about 30-something%. So it's far lower than 40% benchmark. But then by the time you bring in customs revenue and NNPC revenue, you see the ratio trending down. So there's nothing to fear. So the whole issue about debt sustainability is out through the window in that respect.
Let me just take you away from all those figures and highfalutin economic terms. Let's come back to what the ordinary people like you and I, like me, will understand. Application of that.
Okay.
Yes, they said, okay, we're going to put that money into, for instance, universities.
Well, let's look at the figure. We'll look at where the money has gone.
Okay.
Infrastructure received a big boost. You saw the housing, the works, the road,
yes,
the works, and then the
power. Universities,
power,
and then
power got
primary healthcare.
That Fasholas bit got 160 billion, which is useful because infrastructure is the issue, is critical. Then you have security getting about 47 billion. Then education got something. Those new 6 universities that are struggling to get infrastructure, they got something. And then of course, there is something for Unity School, subsidy of their feeding. So that's good. But they tell you the biggest item, as far as I'm concerned, which is legacy, both for this administration and for the House of Assembly, is a big legacy, is the health. That 57 billion on health.
Yes.
Why is it a big legacy? Is because if you go to education, you see basic education in the consolidated fund, and which means that they will enjoy statutory transfer. So you can't piece about with that money. Now that is joining them in that league. And when that 57 billion will attract statutory transfer, it means it's not going to be at the whim and caprices of ministers. Now, that will attract private sector into health. Because private sector will provide service, they provide products, but they know that that money is going to come. There's not going to be a long story. So private sector will leverage that money 3 or 4 times just because they know that there's certainty of the release of that fund. So the issue now is judicious application of that seed money in health. That is what is going to explode the health sector and make it a really buoyant. I wouldn't be surprised if over the next 3-4 years, health sector will account for at least 10% of the GDP or more because of that injection.
Now, you're so enthusiastic about this increase of 5%. But you know that it is predicated on the good fortunes that we're expecting from oil. But the oil is a very volatile commodity. Don't you sense that something may go wrong along the line?
No, it's about 1% of the consolidated fund. And it's going to be going up, and then that money is going to be going up as well. But look, health is service.
No, I'm talking
you're talking about generation, income generation.
Yes.
Health is service. Nollywood is service, creative and cultural industry, music is service, hotel, tourism, that's services. If you do good service, if you provide good service, it generates revenue. There's nothing that says you cannot charge for provision. Why are we having medical tourism? Our medical tourism is taking the money to India, to America, to Germany. But if we invest the money correctly, people will be coming into our domain to enjoy those services, and it becomes a revenue generating mechanism. So you can rule that out. But the thing is that is the solid foundation that you lay that makes it a viable industry, and that's what is going to happen with that provision.
You said the price of oil today is around 78.
It's 78.559. Yeah.
Don't you think that because of the volatility of the crude oil market, that something can go wrong along the line, that it can come down again?
No, without a doubt, it can come down. But what difference is that going to make? Explain to me. What difference is that going to make to the health sector that has got money allocated to it as 1% of the revenue, consolidated revenue, which you say the consolidated revenue may go down, may go up, yes. But the issue is not whether you earn money or not from any sector of the economy. It is whether you invest it correctly in sectors that will make sure. Okay, if we've been investing correctly in agriculture today, we wouldn't be talking about oil. We would have continued with the tempo of the 60s and continue to provide 2 to 5% of world, but we're not.
Okay.
So it is the correct application of that investment in the subsector or sector that would create that resilience and create that diversification that we're talking about.
Okay, Prof, we've reached the halfway mark of this program. Let's allow Nigerians to say one or two things about the 2018 budget. We'll take a short break and then we'll listen to Nigerians on 2018 budget.
I'm not seeing it being realizable.
I'm not in best position to answer this because I'm not the one that carved out the budget money.
The feasibility, seriously, I do not know.
Is it achievable?
Of course, because all things are possible.
If you were to give the president an advice as a special advisor on budget matters, what sector would you advise that the president pumps in more money?
Agro has been our natural thing in Nigeria. It's just a matter of discovering of oil that makes the autos divert a bit. But notwithstanding, it's better we come back home to agro now. And the health sector is as well suffering.
If you heard of people going on the issue of Boko Haram, you can't see somebody of 70, 80 years. At least it's within the average of youth age that are going into all this kind of criminal acts. You understand my point? If we don't satisfy our youth, you have problem in this country. So issue of at least farming. If you don't have money, can you farm?
Education should be looked into, and possibly IT. Yes, seriously. We are lagging behind. And the fact that Nigerians don't have access to internet and we're having it in a very expensive amount, we are seriously not gaining some information we are supposed to get on our own.
Why Nigeria is in the current situation we're in was because the prices of oil dropped, and that's what led to all these things. But in agriculture, if you invest in agriculture, the prices doesn't fluctuate as much as oil does. So I think I would advise them to go into agriculture and to invest more of our money in agriculture.
And many people have died out of the Nigerian citizens. Many have died. The ones that cannot even be recorded. But on daily basis, the people are dying. So our government should look into the health sector and try as much as possible to solve whatever problem that is making the health workers to go on strike.
Welcome back. Prof, if we were to go by the views of Nigerians there, majority speak about more investments in agriculture. From the budget figures that you have, do you think enough justice is done to that sector in terms of budgetary provision in 2018?
Now, agriculture, let's start from African Heads of State Malabo Declaration in 2014. They say that budget should provide 10% for agriculture. We're not there. They also say that they recognize that women are very critical.
Yes.
80% of the primary produce are done by women. 80% of the processing of primary produce, gari and all the stuff, is still done by women. And 90% of people who sell them in the market are women. So we recognize all that. But one thing I would say is that I think it's probably around 5% or less. We're not there in terms of that target. And agriculture has an advantage that there's equal opportunity in agriculture. Anybody and everybody can engage in agriculture. Either you are doing some fish in your house or poultry or everything. So everybody can do it, can engage, can employ themselves. But not the same in mining. Not everybody can go into mining. Yes. In other industries, it does not as that. But the issue is that government will argue, but there are other sources of money coming into agriculture. So not just from the budget. For example, you could see the success from Anchor Borrowers Program is an intervention fund, and that has changed the game for agriculture, that we are now heading to self-sufficiency in rice production. And next year it will be millet and sorghum and wheat, and then 2 years for the sugar cane. So there are success stories there, and there are lots of other funds that you can still get through to agriculture, SME intervention funds, all those money. And then there are loans again from ADB and some of these other development partners. So there are many sources that are putting in resources into agriculture. But I think where we need to get more serious is on value addition. Because even though we have tremendous success, and the growth is just 4% plus. You remember it was about 3.06, now it's over 4% in the GDP. But it is not enough. It's not enough because our growth rate is 3.2%, and our urbanization rate is 6.5%. So agriculture must be ahead of that 6.5%. Okay. So 7% is where, even though the African heads of state expect about 10% growth on agriculture, but 7 is fine because 7 takes it well above urbanization rate, and the urbanization rate is about young people heading into the city. Okay. So who is going to grow food for them when the people actually growing them now are 65 years old?
Now, this budget is coming 6 months into the year 2018 already. Many people believe that the time is long gone.
Yes. Yeah, there's a caveat there. One is we've tried to wrestle with the issues around the delay in passing the budget, regrettably so. But the House of Assembly have allowed the 2018 budget to run to 30th of June. And as far as we know, the budget performance is in excess of 70%. So which means that by the time it comes to end of June, maybe it will go to 85–90%. So that is not bad. I'm not making an excuse for budget delay. We shouldn't have the delay. But the message that Nigerians are getting is that the Assembly is simply interested in May to May fiscal year, and government is January to January fiscal year. So, you know, and there's that dichotomy. But I don't think it is all lost, because we will still spend that budget for 2017.
What some people are saying is this. What they are saying is this. Okay, if by now we're just talking about passage of the budget, president is yet to assent to it, and then we are now going to award the award of contracts.
That takes 3 months, minimum of 3 months.
Yes, the year is long gone.
That's right.
Do you see actual releases of funds coming to time, to the extent that we'll be able to say substantial percentage of the 2018 budget is implemented by 6–7 months' time?
That is the challenge. That is the challenge. But there's some hope, because if you see if the FIRS is projecting such heavy release collections, it means that there could be more money available than hitherto. So because of the expansion of the tax base and all the effort that they've been putting into it. So it's not an ideal situation. But the sensitivity that I can see lacking in the National Assembly and the other side is that they don't seem to realize that government's capital expenditure on the budget is a catalyst. It's a catalyst that draws down so much counterpart. You know, can you imagine if you were able to draw down trillions of naira counterpart in January? That would have done a lot of work by May.
Yes.
But that's the one that they're not looking at.
Now, this is, like we said at the beginning of this program, 9 months to a general election. If we are to prioritize 2 sectors that we need to pump money into fast, what are those areas that you will advocate?
No, we do know that agriculture is so critical to feeding us and also food security. And don't forget that some part of Nigeria are not producing because of security issues. You know, the Northeast, part of the Northeast, not all, part of them. They are not only that they are not farming, but they're in IDP camps. So we have to factor that. So there has to be acceleration. But the resources to do that are actually not far-fetched. But of course, the infrastructure continues to remain a challenge, and you cannot do it. You can't avoid that. And that's why I say sorry to World Bank and IMF when they cry on debt sustainability. I say, look, we have to build our infrastructure.
Okay.
So those two are very critical.
Okay.
And of course, I'm not saying that social inclusion should be forgotten. No, but you're asking me to give you 2.
Yes. Now, I cannot but ask you this. We are moving very close to election year. Do you see any substantial thing being accomplished? Because politics is in the air. Are we not going to spend?
No, the politics is for politicians. The civil servants are the ones implementing this budget, and the private sector that are doing what needs to be done on the road. So I don't see there's that disconnect between the two. If the resources are there and the budget has been passed, there has to be an acceleration. And that acceleration is on the procurement. But unfortunately, the easiest way to go to jail in Nigeria is to tamper with procurement law. You know, you go in there, 7 years, no option. So we'll get that ball rolling, and hopefully we'll release all the counterparts that are necessary.
Okay.
To keep moving.
I must thank you, Professor Kenife.
My pleasure.
Always a delight to have on a program like this. So we thank you for coming on the program.
Thank you very much.
Thank you very much.
Thank you for inviting me.
This is where we call it a date on the program Nigeria Today for today. We'll be back tomorrow with yet another topic. I am Shegun Ojelade on behalf of my producer saying good night.